Welcome back to Everything Money. In this video, we are talking about Carnival Cruise. Yes, the boats, they're coming back. We will show you the financials and the mindset about investing in a company like Carnival Cruise. It's been hammered the past year. We'll show you the numbers. We'll get to the stock analyzer tool to see what we might be paying for Carnival Cruise. And yes, we'll head over to Mo over there, that handsome fiend who's trading CCL and other stocks. You can join him later in the video. But first, why should you listen to us? Paul, we've been talking about CCL for over a year now since the crash, and it was one of your top picks. But I bring your normal person questions about this company and other companies to these two guys. They maintain and manage over $100 million in real estate, all in the Caribbean, Paul, where we're going in January. You know, I love that Mexico house. They do stocks. They have multiple businesses. You can listen to them and really get a hold of your finances, get rid of that financial planner, and could start with your CCL investment. I take it away, Paul, and tell them your mindset about this company, because it's been a crazy one over the past year.
Yes. So first off, follow us on Instagram. We have a new Everything Money account. And then follow us personally on the other ones because it really helps us feel warm and fuzzy. So guys, this is our Everything Money software. We go to the 8-pillar tool. Aren't you an 8-pillar tool, Seth?
I have been known to be, yes, I have. In fact, by the way, my wife and my mother and the kids, they're going on a CCL cruise here coming up. And because we're shareholders, we got a little bit of a discount there.
Oh, good for you. Rest in peace.
Wonderful.
Yeah, pretty nice. So, all right, go ahead, Paul.
All right,
CCL.
so
you're the reason that we can't make money on
That's
this.
right. There you go.
So Carnival Cruise Line, CCL. So guys, I'm going to look at this one a little bit different. We all look at the income statement first. Look at this revenue drop. They hit a peak of $20.5 billion, and they dropped 97% of their revenue.
Jeez.
Yeah, they were shut down. So really, you can't really look at the profit.
Yeah.
Ready for the profit? Hello, $3 billion in profit, and they've lost $16 billion in the last. So
what we normally do is we'd want to look at a company before we invest. We're not going to read a 10K. We're not going to look at conference calls.
First,
do they make money? And this one's a scary one because they used to, but last year, of course, they got slaughtered.
So our 8-pillar analysis, if you watch any of our other videos, it doesn't really apply in the stock, and here's why. I'm going to go to the 8 pillars tab. All X's. But there's a reason why I actually own this stock in my portfolio right now. I think it was being exaggerated. I bought around 13, 14 bucks at 24. I used to think it was a $50 or $60 company. They've diluted their shareholders a few times. I now think it's a $40 to $50 company. This company is a prime example of one that's fallen a lot, gotten a lot of bad press because of shutdowns. But I think we're coming out of the shutdown now, and I think that's a stock that potentially could go much higher once the free cash flow starts to increase. Now, the one thing I will say is their free cash flow has to be funded 2 different ways, through debt or equity. And they've chosen to do equity a lot of times. So they're diluting their shareholders. So one of the things they've done is look at their shares outstanding. It was down to 689. Now it's at 1.13.
Yeah, that's absurd.
Every time they do this, I drop my price in the stock. I'm not going to lie. I'm looking at exiting the stock somewhere in the mid to high 30s. I look at this saying, this stock is getting diluted. And if this shutdown and the lack of cruises goes on for much longer, this value play doesn't become a value play anymore because they diluted everybody out of it. Do you follow what I'm saying?
Yeah, Mo, you've talked about we got to get the boats and we got to get full price tickets back on the boats. That's important because this is very popular on your morning show.
So based on their history, I do think that when they will get to a point where they start buying back shares. Now, the question is, can they do that at some point? So it is, can the boats get back on the water, which they are? Can we start charging full price to put the boat with full capacity? That's the other question, like Seth just said. And then the next step is start buying back those shares again to hopefully you were saying, okay, we're going to do this because of COVID, and now we're going to fix the problem that we knew that we were putting into place. Hopefully that can happen.
So one of the concerns I have, guys, if you look at the free cash flow, so on our software, I put the free cash flow line on here to make it easy for everybody. Their free cash flow peaked around $2 billion. In the last 2 years, they've lost $17.5 billion in free cash flow. That's 8 years of free cash flow gone. That is a concern of mine. If this continues on, longer and longer, we're going to have problems. Now, they've sold off some boats. I don't know who is buying boats, but they sold off some boats.
Everything Money should buy a boat.
Yeah, we need a boat. It's like $2 billion. Let's go buy a boat. How much do those boats cost? They're like $2 billion.
I heard they're about $1 billion.
Okay.
On average.
I'm actually surprised it's not more than that.
Yeah.
Because some of these like billionaires spend like $500 million on a personal boat.
I don't know.
So anyhow, I look at this as a very cautious play. I would be selling puts on this. What does that mean? You pick a price in the future that's much lower. So the stock's currently at 24. Maybe you sell a put for 6 months from now at 15 bucks. Somebody's going to pay you money, and if it goes to $15 or below on that 6-month mark, you're forced to buy the shares from at $15. So the stock goes to 13, you still lose money, but you would have bought it at 15 anyhow, so you're okay. You still lose that $2 a share, but it'd be no different than buying them when they hit 15 anyhow. This is a way to play a company like this. This is I would not be putting a big part of my portfolio into CCL. I would dip my toe in, but remember, when things are most fearful, that's when the opportunity is best. Look at this company's stock price in the last 2 years. It got as low as, what is this price right here? Oh boy, I can't even get that close.
I gotcha. They got as low
850.
as, yeah, intraday low of 780.
Okay. When things are scariest, that's when the opportunity to make most money is there. This is 3 times higher than it was at its low. I'm not adding any more shares to my portfolio at this point because I don't think I get concerned with them getting back in the water and increasing their cash flow. One way to look at it also is let's look at their quarterly numbers. Look at their revenue. The good news is their revenue is up huge. I mean, dude, look at this, Seth.
That's really good.
26 million.
Look, it's up 20 times.
Yeah.
So they're starting to come back here.
Coming back,
but look
right.
how low it got, guys.
I know.
Over 99% drop in revenue. Over a 99% drop in revenue. Incredible. So, guys, do I think Carnival Cruise Line is going away? I do not. They're the world's largest and best financed cruise line. I'm still a believer, but they can still dilute the heck out of you and still kill. Let me explain the dilution thing because that really matters. Let's say you have a company that generates $10 a year in profit, and there are 10 shares outstanding. Every share gets $1. $10 divided by 10. Let's say the company increases their profit from 10 to $15. Everybody's cheering, look how great they did. But meanwhile, they also issued 5 more shares. Now they have 15 shares outstanding.
Ta-da.
You still have $1 of profit of that. So even though profit went up 50%, you got no benefit because they also increased the shares outstanding. This is a very rookie mistake. Regular investors don't follow it. Luckily, you're watching us. Some people will tell you that issuing shares helps the company. It does not. Stop listening to those morons. So that's why I get concerned about dilution. Now, with that said, right, rather have them dilute than taking on debt. It depends on the company. If the company is selling for a massive premium to market, then maybe that's the right thing to do. I don't know, but I think with CCL, they probably issued shares because they didn't want to take on so much debt because debt is scary. When times are tough, debt is scary, right? So we have to sit there now. Here's one thing I'll look at. Let's look at their free cash flow when things were normal. When things were normal, free cash flow was $2 billion a year. So one of our metrics is we want to take that $2 billion, multiply it by 5 to get our long-term liabilities. That'd be $10 billion in long-term liabilities. What do they currently have? $30 billion in long-term liabilities. But guess what? Back when things were okay, they had $10 billion. So guys, this is a scary play. I'm not denying this at all, and I'm not buying any more shares at this price. But I still think there's upside on this one, but it's going to take a while to come through. I really do believe that.
If you want to trade this at a quicker pace, we'll show you how you can trade this with the charts and trends. Mo, take it away with the Bid-Ask Nation.
This is one of my absolutely favorite stocks to trade. I've traded this multiple times since COVID. So this is your high and this is your low, and this is that 50% area. And that 50% area is about $32. So when we got back in this area, I bought shares from a trading perspective and value. When I traded it, I came up here and I exited. I actually did exit on this high and it fell right back down. And I waited for it to pop back up again. It hit that 32 level multiple times. I sold there too, and I haven't done any shorting on it. But the good thing about a 50% rule stock like this is it's telling you it needs a lot of volume, and the fundamentals probably have to be there for it to break through that $32 level. So as soon as it gets to $32, just sell your shares. They're almost telling you this is the point that you sell at, and that's what I've been doing several times. So if you want to learn how to do that, come and join the Bid-Ask Nation. This is the best 50% rule example I have seen in a very long time, and it's working like a charm until it gets to $32.
If you're out and about or you're watching this at work or on the go and you want this info on your phone, we have the Everything Money app and software. Paul will tell you about it right now.
So guys, we created the software because our users originally were saying, hey, how do we do stock analysis without waiting for you to make the videos? So we made the software. You get everything here, everything that's coming soon, you get as well. You get everything on the software, including our stock analyzer tool that'll tell you exactly what to pay for the stock based on your assumptions. You get all of this plus daily content, 2 or 3 videos a day exclusive to software buyers. You get access to Seth Moe and I, and you get the community of 6,000 people that you can talk to every single day about your investment ideas. Because you probably, if this makes sense to you, everything we talked about in other videos, you're probably alone amongst your friends like we are. But now we have other people to talk to about ideas and exchange ideas. This is all for only 90 cents per day, and that price is locked in. Once you buy it, you get all the future editions for no extra charge. 90 cents a day. It's a no-brainer. If you can just increase your returns by 1 or 2% a year, you'll make hundreds of thousands, if not millions of dollars more in the future. Sign up, everythingmoney.com or Patreon. The benefit of everythingmoney.com is you don't pay sales tax yet because we aren't big enough. And 2, you don't get double charged in the first month. So you choose what to do. 90% of our signups are through everythingmoney.com. Sign up, 90 cents per day, no brainer if you're serious about your financial future.
That's our final take on CCL. We're not adding. We still hold, and we're waiting for 32 and those charts to tell us when to get rid of it. We shall see, Paul. They have rough waters ahead, no pun intended. So, yeah, and we're looking to jump ship very soon. Fondle the thumbs up. Oh, my God, the dad jokes are flying out of me. Fondle the thumbs up. Join the community, and we'll see you next video.